Welcome to Pitch Your Firm. I am your host, Mark Howard, and today we have quite a unique guest on the show. We have Kishore Mirchandani, the CEO of Fiscalix, and they run a very interesting operation. And basically, it's a next-gen group of accounting firms. They've actually developed one of the first integrated AI agents for global talent. And Kishore is going to talk a lot about that today. What we're going to really try to find out is how it can help modern accounting firms and what are some of the advantages that you can use with some of the systems and also some of the technology that they're working on. So, Kishore, welcome to the show. Why don't you take it from the top? Maybe give us a quick little 30-second intro, and then we'll dive into some of the interesting things you guys are doing.
My career with accounting started at Deloitte, got trained there, and then I'm a CPA from New York State. I live between New York and Miami right now, being a snowbird. Uh,
Yeah, Snowbird. Great. Love it.
and I have been a serial entrepreneur and started with setting up an accounting firm in New York City, early 90s, and built it to good size. And that's when whole technology was coming in. And built it to a size where my partner and I, at the end of the tax season, said, how about creating a product in accounting? This was late 90s, 99,
Hmm.
2000. So we're selling hours. How about we create some more buzz to accounting? And that's when we came up with offshoring, outsourcing with technology. And this was in 2000. We raised some capital and started with a company called Accounts. And that was renamed in 2002 when we acquired one of the big four's small outsourcing practice in US. And that was more of a staff augmentation, and all the work was being done in US. And in 2002, we set up operations in India. I was born in India, but I've never had worked there. Adult life has always been in the United States. And so went back to see which is a good location, did some research, how to do it, and took all the tax work and the bookkeeping work of the practice over offshore to test it out. How will it work? What resources we need?
And
What?
this was some of the early days of what you were building. Not a
Yeah.
lot of people were doing this at
No,
this
no.
stage. So you probably had to figure out a lot of this operations as you're going along.
You got it. So the interesting part was first few accounting firms we pitched for offshoring of tax in 2002. And there were only two or three players who were all trying to do it.
Sure.
And oh, how far is Bangalore from major cities? It was not that known at that time. And how will the security work? We said
Yep.
we certifications. How will the login to our software, whether CCH or Go systems for tax? And I was a tax guy, so I did all the training myself.
Sure.
And we got fortunately about 40, 50 firms signed up way back in 2002 and 3.
What was the closing argument? Was it price? Was it efficiency? What kind of moved the needle in those early days?
It was more of a labor arbitrage, so it was more
Hmm.
of a price.
Sure.
And we came with unique pricing. We said we'll charge you per return rather than hours per hour. So
Per
we
return.
per return. The tiers were simple return to complex returns to partnership returns, which have a lot of K1s and all that.
Sure.
So that was the hook which helped. And we used to go pitch to a lot of the accounting networks and all that to talk about it. It was more of an educational sale at that time.
Sure.
So built that business, and the Big Four became our client also, where we set up their tax processing center in Bangalore, as well as audit support, which is what we came up with the idea of audit. They said, what else can you do for us? Because it was successful in tax. And they said, okay, I said to them, I said, what about audit support? "Oh, what can we do in audit support?" I said, take those simple tasks. And those is accounts receivable confirmation process, bank recs. Technology was still coming in early 2000s. So
Sure.
we set up a center for them. And suddenly we had 2,000 people just for this Big Four doing the work. And it was first started with US, then went to UK, and then a little bit from Australia. So we started going deeper into the relationships. Fast forward, built it to 5,000 accountants and in Bangalore,
5,000.
5,000 accountants between Bulgaria, India, and Malaysia. Bulgaria was more for nearshore, which was in those days, Europe was very behind US in terms of offshoring. So they said we rather go nearshore, which was Bulgaria is what we decided. And our model was pretty much lift and shift, and that was traditional in those days. So our business with accounting firms was just one of the big four, and smaller size accounting firms. But majority of the business was from the CFO suite of large companies in the United States and UK. That's where our focus was. So that was a lift and shift model, and that's how we were able to build scale. And the big four was about 2,000 people. There was another client out of Houston, which had about 300 people. One of the strategic investor was Cargill, and we did a lift and shift of their accounts payable process out of Fargo, North Dakota.
Lift and shift. I love that term. I think if you ever write a book, you might think about that as the title.
That's interesting. I've been thinking of writing a book actually.
Think about it. Okay.
With that lift and shift model became successful, then technology was coming in 2000. I realized in 2010 that technology is going to come in, cloud discussion was going on. The time has come to either I go to our investors and get them to invest a lot in the technology rather than just labor arbitrage. You to marry the
Sure.
two. They said, no, go back to work. We need to build value. We want to do this, that, whatever. So my partner and I decided so we sold it to a large public company in US called EXL. And they had very limited F&A outsourcing. So they bought the company and I moved on. And from there on, as I told you, I was a serial entrepreneur. When I came off to the beach, but couldn't stay there too long. So I went back to be a CEO of a cloud migration company. It was a
And how much do you sell the firm for, if that's not too sensitive, or just a
we
ballpark?
sold it for over 150 million, roughly.
150 million?
Yeah. Our
Okay.
revenues were around close to 100 million. And this was
Amazing.
built over 8-year period.
Yeah.
Investors made money, employees made money, we all made money. It was a good
Yeah.
run. Focus, we were pure play. We call it pure play, lift and shift, finance and accounting business.
Yeah. So I can imagine that after that, you're in Miami, you're sitting on the beach, you're getting that itch again, and you're like, I have to do this. Technology is getting better. I want another go at this lift and shift. So I'm assuming that your story kind of starts now with what you're doing more recently.
Exactly. So a few other stints, I built one more aspect which is related to this lift and shift and technology is I built a SaaS platform in compliance, global compliance. And short stint, sold it to a legal firm in India. They were very interested in that. And so they bought it. It was just a 2-year stint. Then obviously now come to Fiscalix. So I, along with other co-founders, have set up a company called ISTRA Labs, Inc., Delaware company. And the co-founders all have experience in offshoring. I was focused on finance accounting. The other co-founders have experience in customer care, finance and accounting, and airline business, outsourcing of airline back office work. And we all combined have several years of experience as well as built a lot of teams in offshore locations between Europe, India, and Philippines also. So we're all experienced people, the operators who have built businesses and sold them. So here again came the opportunity. So lift and shift was out because of technology. So the clients would tell all these BPO providers, as we call them, that what have you done for us recently? Your prices have been going up with
Sure.
inflation. Your labor arbitrage is still good. What was US salary of an accountant, junior accountant is, let's say, 70, 80,000 with benefits. You're charging us 25, 30,000 is good. But now it's become 40, 50,000. So what is in it for us? Where's the productivity gain? So one of the concepts which we had in the old days was 90-day challenge. Every 90 days, we sit with our client. What else can we do for you? So create more efficiency, productivity gains. So thinking about all that, we said now that AI is here, how can we make AI work in finance and accounting? So about 18 months or 20 months back, all the co-founding teams sat down I said, what can we do in finance and accounting? So the strategy of ISTRA Labs was to start two verticals. One was in finance accounting, one was in customer care, because both are related. If you get client in customer care, you can always sell to the CFO services. The finance accounting is not limited to the accounting firms. The accounting, you can go to CFO services also, CFO suite to sell. So with that strategy in mind, we set up two verticals. One is called Deep Talk, and which is a customer care, and one is Fiscalix. So those are your two verticals within ISTRA Labs. I'm the CEO of Fiscalix, and I'm also CFO for ISTRA Labs at this moment. The strategy for Fiscalix started off with, in talking to some of the accounting firms, how we can make AI work. It's some of the people we talked to, it went over their head because this was about 2 years back, more than 2 years back. AI was just coming in. ChatGPT was just
early
emerging.
days of ChatGPT.
So it was thinking through that early days of outsourcing, offshoring, which I was involved in. How can we differentiate ourselves? What do we do different? You can't go to a accounting firm say, oh, you put bodies in India for labor arbitrage. How do we make AI work? So we talked to one of my contacts in the accounting firms, and I asked him, would you be our design partner? He was quite intrigued because they were offshoring already to India, this accounting firm. And I said, could you become our design partner? And what does design partner means? Design partner means that you work with us, you help us in the build phase of the AI agents. AI agent is also new terminology in the last few months.
Sure.
We said, we'll build out AI, making AI work with automation of the workflow within the audit, within the tax, within the CAS. So they agreed to do that with us with the condition that we will give them at a very favored pricing once the product is built, all the AI agents are built. So there's a perfect relationship. So this particular accounting firm has PCOB audits, they have private company audits, they have CAS and tax, both. So this is what your traditional accounting, mid-size accounting firms are in the United States.
Sure.
So besides that, we started going to market and talking to some other professionals. Is it a good idea? Is it a bad idea? Because way back when I started offshoring, I did talk to one of my key friends in the industry, who's a very well-known person today. He's the most influential person in the United States today. Alan Colton, actually, to give you the name. When I sat
We're
down,
going to get him on the show one of these days. Yeah.
and he's a very good friend. So he and I sat down for dinner, and he'll validate this if you talk to him. When the offshoring, I was setting up the company, I said, this is what I'm thinking. He said, oh, I don't know how will that work. And years later, we sat down for dinner again. He said, oh my God, this is becoming a mainstream now after having built OPI. So I sat with him, Alan, we're doing this again, AI. What do you think? He says, spot on. I think this is where the future of the accounting firms is. So with that sort of validation and a few other validation from other friends in the profession, we said, okay, now let's figure out what do we do. So strategy became that, why don't we go buy a couple of firms first? And with the APS structure, which you have talked about in your shows also.
Alternative practice structure, correct.
I said, why not go out and figure out how to buy 2, 3 firms, which will seed our technology as well as with the information or knowledge which we'll gather. And by the way, we are private equity backed and investors are there. So we pitched to our investors. They liked the idea. Then they said,
So is that Fiscalix, the
Fiscalix.
private equity backed, or the
ISTRA
other
Labs.
company? ISTRA
ISTRA
Labs. Got it. Okay.
And we pitched to the investors, and then they said, oh, there are a lot of other people doing the same thing, acquiring firms. How would you be different? I say our differentiation is that most of them are doing financial engineering. They are in it not 100% to build a business. We are operators. We'll build the business. We'll buy a few firms opportunistically. We'll buy a few in audit, few in CAS, few in tax, and then specialize in the services and our advisory side. All there are opportunities of AI, making AI work. And with that in mind, we went out and started looking at acquisitions, and which we will do so in next 2 quarters. which are planned.
Now, let me ask you right there, is that pretty much like a platform play? Are you looking to have Fiscalix as a platform and then acquire other firms like under that umbrella? Is that kind of the play you guys are looking to do?
Yeah, but we're going to buy a limited number of firms. We're not going to do what other people are doing because we want to use these firms from perspective of building AI, making AI work. They're a test ground for us to make sure that the product works, AI agents work, and then we can sell organically to the outside accounting firms and outside the accounting profession also. It's
So
all new.
what
Yes, go
got
ahead.
it. So the criteria for these three or so firms that you acquired, was it a particular niche you're looking to acquire and then like building the tools for that niche, or what's sort of the criteria for the acquisitions of these firms?
So the criteria is we need to build PCOB audit. We need to build AI for private company audits. We need to build something. Tax, there's a lot of technology there. So we have thought through, which we can talk about on this show, about what we are thinking about tax. We've got a prototype ready and in cash. So we need four type of firms where there are specialties and the partners there are futuristic who can help us think through AI. As you well know, not everybody in the accounting profession today is really sold 100% on AI.
Of
You do any
course.
surveys, if you read any surveys and all that, it tells you that 75% are talking about AI, only adoption is about 10, 15%, 20%, because it's all new. Everybody's conservative. Accounting profession partners are very conservative. Not easy to sell to them because I've been in meetings with few accounting firms, not only from sales perspective, but evaluation perspective. It's very interesting the responses you get. The partners who are ready to retire, they don't want to know about AI, that they're scared because the
Sure.
valuation of the firm will go down if they don't really adopt AI over a period of time. I think AI is here to stay, like offshoring was in the early stages. That's what we are here now. And the younger partners, yes, let's go, let's understand what it is. Let's show us what you can do, how it will work. What are the challenges? What's the security? What are the data? How do we manage our clients? What will work? How will offshoring work? Those are the younger partners will embrace it, I think, over a period of time. And if you take the entry level into the accounting profession, today there's shortage of 300 odd thousand accountants in US alone. Forget about Europe and all that. And I did talk to some firms in UK, and there's keen interest from UK also for us, but we're not there yet. We then sat down with at least two firms we have identified, which closing will take place by June, I hope, between the first part of the second quarter. I think we will start finalizing everything. And while we are doing that, some of them are design partners, which are helping us build the AI agents. So that's what our strategy is in terms of building. Now, to talk about each of the categories, if you want me to explain to you a little bit more about each of those categories.
Let's actually go back for a second because I'm very intrigued. You obviously made a calculated decision to acquire these firms versus like building it on your own. Is that because you wanted to accelerate the process, or you actually wanted to have the clients on the ground to accelerate the entire process? What was the identification for that?
It was to accelerate the process. Now, as I explained to you in my previous company, which was called OPI, Outsource Partners International, we bought that practice from the Big Four. And that was to seed, accelerate the process. We had then clients which we could offshore, and we had the pipeline. So here we buying these accounting firms is similar thought process. The other co-founding members built a company called WNS. They bought 3, 4 companies at the startup stage, and the funds were ready. Private equity funds were ready to back them. The private equity funds were backing me, and now they're backing us here together. And thesis is that you need to get revenue and EBITDA fast. It's not going to be a startup for too long and you build and burn too much money. So that's the thesis around, and you get live clients to test out the product also. Otherwise, you're building products in vacuum, and the failure rate is very high in those situations. That's the reason.
And just to level set, how much was and if this is not public information, we can skip this, but how much private equity are you backed with right now? Is that or ballpark number?
That's confidential. So
Confidential. Okay, we'll go ahead and skip that. No worries. I think the point is that you're in a position now where you're trying to leverage this capital and accelerate the process. And now we're at the point where you're actually starting to deploy the technology in these four different sectors. So we have the tax, we have the audit, we have the two others. Without going through the entire portfolio, let's focus on maybe one of the most interesting or innovative parts of this. I don't know if you want to talk about like the tax automation, the audit automation. Maybe we can pick one and we can dive into it and talk about that a little bit.
let's talk about audit, which is a which is really tough. And there's a lot of technology available there with current softwares which do the traditional way of auditing. In audit, there are four key steps, which is the engagement process, the audit planning start process,
Hmm.
the execution, and finalizing the audit report. Those are key four elements of the product, of the workflow. So what we have done is we've broken all those into different micro apps. We have got Sarah, who's the audit manager. She's a AI agent, AI agent manager, audit manager. She will coordinate the audit of a PCOB audit from the engagement to finalization. The work would be handled in onshore and offshore. Now, instead of lift and shift, we do right shoring. So a lot of the accounting firms today have offshored. If you talk to them, a firm which is doing about 50, $60 million in revenue to hundreds of millions of revenue, I think everybody has dabbled into offshoring.
Sure,
The challenge is that some of them have started with 10 people, 20 people, 50 people, but they all have different challenges because they're in a silo.
sure.
So the right shoring is important. So when we talk to the accounting firm, Sarah will determine what that right shoring mix is. In talking to one of the partners who do audit and tax as their primary business, they have, let's say, 200 people staff. Of the 200 people, they've got only about 10 to 15 in offshore location. Very difficult to manage, the 10, 15. They're in a silo. So what we're saying is we will come and help you right shore. What processes can be put as AI augmented talent, which we put in offshore, will be trained in AI. Now, as you can see, study the reports which are going around in the media today, the training is being one area where a lot of the accounting firms are looking at AI. Communication is another area, but not many people are there looking at workflow automation. That's where we are focused on. So we are saying that from the engagement to the finalization, Sarah will assist you through AI augmented talent offshore location, which will be like a team extension for you, but they'll be AI trained on.
Let me just make sure I understand this. And you're using the term right shore, and that means essentially taking these processes using AI and keeping that platform onshore versus the offshore capabilities. Is that
Some
right
parts and
shoring?
portions could be onshore, some portions could be offshore. This mix of the two. I remember what I said about labor arbitrage is not the only aspect for offshoring. I'm saying that along with AI, which you can utilize onshore also, but offshore will give you much more savings. I'll give a couple of examples. A couple of examples I'll give you in our AI agent. Take, for example, we've got document analyzer. For a public company, you take a 8K. Sarah comes and asks a question. What's the name of the company which you're going to audit? What is the fiscal year end? You answer a few questions, and then right away it brings out last two 8Ks. It analyzes it. It gives you all the changes which have happened, what the additional audit processes you have to conduct, and it automatically updates your audit planning document.
Help us understand exactly what Sarah is. Are you talking about the clients are going to a portal and they're uploading documents? What exactly is that Sarah agent? Where does Sarah live?
Sarah lives in the cloud. It's a cloud, it's an AI agent.
So the user interface is the end client is uploading documents. Is that how it's working?
Yes, they're
Got it.
uploading. So I'll give you another example of uploading documents. For a private company, public company, you can download from PCOB all the
Sure.
financial statements and do the 10, 8K and all that. You don't need to upload anything. Now, private company, you don't have that information. So what do you do there? The document analyzer, what it does is you can upload the board reports, you can upload any minutes of the meeting, and also you can upload any of the trial balances directly to your secured portal within our environment, and it will analyze those documents. So, for example, board reports say the decision was made to do A, B, C. So, what are the audit steps, insights which will give you? These are the additional audit steps. The LLM will give you that, and then it'll push that information to your audit planning memo. And then we integrate with all the CCH and Thomson Reuters products to be able to upload from the execution perspective, audit programs and all that. So on a private company, you can also upload to your prior year financial. If it's a new client, if it's an old client, you'll already have that in your cloud, and you can upload the trial balance for this year. It'll match the numbers, produce a financial statement, and go out and create the notes for your financial statement also, and look at the differences between the two, and what could take 2 days to do the work for an accountant here will be done within 2 hours. But
Okay.
that's
And I want to dive into these timelines. I guess the first question is, how do you audit the auditor, right? What if, how do we know Sarah is not making mistakes? How do you check for that?
ultimate decision is with the US team. It is enhancing, it giving you all the information to do the work faster, and you'll have all the information there, but auditor, a manager, senior manager, partner will have to sign off.
Got it. So there's some sort of flags in the system. If
The
there's some
flags.
sort of anomaly, it goes to the
That's what it
humans.
gives you, Mr. Auditor. Now you make a decision for the judgment. For example, in engagement process, you've got to check key management personnel background checks and all this. It'll flag all the changes, it'll flag all the issues, but decision will be made by the partner. We can't, the AI is not going to make the decision. That won't work. I don't think regulatory authorities would allow that here.
Let's talk about this from an investment perspective. I am a maybe lower middle market business, maybe let's just say 10 million in revenue. I'm looking to really accelerate my processes. If it comes down to an audit, how do you justify the ROI on engaging a platform like yours? Is there some sort of assessment? Are you saying you come in and you say, okay, your typical audit process takes you 100 hours per year. We get it down to this number. How do you justify that? What is that conversation like for potential clients up front?
There's a discovery process which we have figured out. Discovery process, exactly what you said. We look at the 3 engagement files, for example, and estimate the hours which they spend between partner all the way to a junior accountant. And then we will do a POC, proof of concept for them, and evaluate how much time will it take to do it from right shoring and from AI, and say that 100 hours would be done in 60 hours, combine the two, both sides, US and offshore, or is it 50 hours? But again, it depends on a lot of factors of what size audit, whether it's a review, whether it's an audit, whether it's a first year, if it's a subsequent years, all that factored in. We think is based on each step, which we have a savings calculator, which we have figured out how much time could be saved. And we have tested this, but at the same time, all this will be built a lot from experience also, that we feel confident savings could be between 30 to 50% from today's costs. But we say that we're going to make the process efficient and also do not lay off anybody, but you can reclaim time to build your business by getting new business and not add anybody else.
Right. So the time and money saved with the process is essentially going back to that business to fuel growth, to provide other services, to help them innovate. I like that. So this is basically you have Sarah, you have this automated process, you go through a discovery process, you understand how they're operating, their efficiency level, you come back and say, okay, this is how much we think we can save you. This is what the proof of concept is going to be for this engagement. What is that proof of concept? Is it like you come in for maybe a 2 week period to just try a few test audits? What is that proof of
Yes,
concept like?
absolutely right. You got spot on. In the old days, for the lift and shift model, it used to be doing pilots. Take a
Yep.
small number of people, test it out. Okay, will the process work? How will the we used to do the documentation and went over to offshore location and test it out there, parallel runs, all that was there. Now it's proof of concept, take 2, 3 audit files, figure it out, and then that becomes a standard process.
And maybe let's talk about the emotional side of this because I can imagine there's a lot of accountants out there, AI is pretty much Greek to them, right? And some, even senior partners, they almost see this as like magic or like this black box. Are there any kind of like aha moments for you guys in the sense that, hey, we just showed you in this proof of concept, we just cut the time by 60%. Is that kind of like an aha moment? Are they in disbelief? Are they saying, okay, I want to sign on the spot? What's that experience like?
I think if most of the people are aha is there from a few of the examples I quoted to you, use cases as I call them for 8K analyzer has been received very well. Private company uh, document analyzer is, oh wow, it can be done. But at the end of the day, it's going to be prove it to me. That's why proof of concept is there. Another example is you take accounting policies manuals, which large companies have. We have a policy tool there which can take the policy manual of yours, upload it, and it'll compare to the standards within PCOB or other businesses. We have that all large language model connects to be able to see what those differences are and give it to you as these are the what to think about, which will help in your business. Now, there cost saving is not much there, but it's more of a good to have. And that's part of our process of giving you all these tools to be able to do. So aha moments are there. So we have created Sarah for PCOB audits. We created Paula for private company audits. We got Thomas for tax. So if you want, we can talk.
Let's talk a little bit about Thomas since we just in our last 10 minutes or so. Tell me about Thomas. Thomas is on AI agent on the tax side. What is, how much time does Thomas save on average? What exactly does Thomas do? And what does that engagement look like?
So let's talk about first, what are the challenges with an accounting firm to do tax? There's a good tax technology there already. You're not going to create another product competing with CCH or Thomson Reuters. There's no point going
Sure.
in that direction. But those are all old products which have been in business, I don't know, 30 years or so, and they've obviously enhanced the product over the years and gone with the time. One of the key areas in interviewing some of the accounting firms, tax guys, tax partners, is on the individual tax side. So this is more focused on individual tax. And there's a lot of volume there. HR blocks of the world are there, but this is for a little bit more, a little bit complex above the HR block type returns. The issue is gathering the data. I don't know whether you remember the old days. We all used to say the client comes in with a shoebox, put in their
Yeah.
W-2 interest,
Still
1099.
happens today, unfortunately.
You got it. So how do I figure out how to automate the shoebox and to be able for AI to look at all the documents and say, okay, these are the ones which are missing, and does automatic email communication follows up with the clients that, okay, this is coming, this is not coming, and there's a portal there. You just keep uploading it, and the Thomas keeps analyzing it and keeps bothering with emails. Ultimately, it escalates to the tax manager, tax partner automatically. Oh, here are the clients with these things missing. You should call them up and get the information for you to complete the return. Biggest pain point in doing tax returns, and I used to do thousands of tax returns myself at one time, was that I'll start the tax return 75% through the tax return. I say, oh my God, this is missing, that's missing in the old days. There are some checklists now, there are questionnaires now, but we have gone a step further where we have AI to do a lot of the grunt work. Another white space we found in which we are in working through it to create a notice manager. Thomas will have a notice manager. You have sent out your estimated taxes, but forgot to send one. And you forgot to tell your accountant that, oh, you missed one estimate payment. What happens? You get a notice. What do you do with the notice? You give it to your accountant. What does the accountant do? He'll research. Oh, Mr. Client, you didn't send the information. So what is he? Can he send you an invoice? No. I learned from a lot of the 2, 3 partners which I talked to that this is a cost center for them, not a profit center. All the notice.
Sure.
So here's a tool which will save you time. So you don't have your cost will go down, which will improve the profitability. We have done some study on 2, 3 accounting firms that whatever the EBITDA of an accounting firm today is, with making AI work, we can improve that EBITDA by 20 to 30%, 40%, 50%, depending on how much AI you want to deploy, how much over a period of time the making AI will be adopted by the accounting firms. And I think with the adoption of AI by accounting firms will lead to higher EBITDA and obviously higher valuation. So if you don't get into it, you're going to, again, this is still, jury's still out, I would say. I'll caution that. But at the same time, this is exactly where we were early days of offshoring. This is where we are early adoption of AI.
In terms of your preferred client, it sounds like there's different opportunities here. There, obviously, you are a platform that you serve accountants, but do you also work directly with businesses, or do you just work exclusively offloading or right shoring with accounting firms?
Right now, our focus has started with accounting firms. We are focused on that right now. But byproduct of what we build will be applicable to, let's say, the internal audit side of it. All these suites will work for them. It could work for SOX testing. There are enough, like there are pre-audit firms starting up or pre-audit opportunities within each of the accounting firms where one accounting firm is auditing, other firm is doing pre-audit work. There's a lot of opportunity to utilize AI agents for pre-audit work. So there's plenty of opportunities in the accounting firm, but absolutely that'll be our next phase, maybe in our future state strategy is to build out AI agents for the CFO suite also, but not yet.
Let me ask you this, Kishore, and I want to make sure my math is right on this. Right now, you've acquired a few firms, and your go-to-market is working and serving other accounting firms as well. But you're also saying that your claim for the enhancement of EBITDA margins is 20, 30, maybe even sometimes 40% in certain cases. Why would you continue to work with other accounting firms when you can simply acquire accounting firms and perhaps make even more by economies of scale and efficiency with those higher EBITDA multiples?
We've got to go slow, in my view. First, let's get some 2 or 3 things done first. Being a conservative accountant, also, again, strategy could change from where we are today as we learn more. As adoption happens, we need to validate. Right now, it's on Excel worksheets that what can achieve the savings and the EBITDA, which we feel confident based on our experiences. But realistic is that we got to prove it before we go out and acquire more accounting firms. Because we got to be, if we have a use case of that, we'll easily get accounting firms to acquire. But we got to have that referenceable clients and use cases.
Now, a lot of accountants and even IT SaaS companies are going to watch this podcast and they're going to be like, hey, we love what Kishore and the team are building. How do we replicate this model? And as you probably know, there are a lot of other companies and several that I've talked to that are building similar models. What do you think is your competitive moat? How do you, right now you're on a cutting edge, how do you differentiate yourself from the competition? What do you feel is your edge right now and really staying ahead of the curve?
Our edges are experience in execution of right shoring and building technology. We've done both those things in our careers. A lot of people who are doing it have not done that experience, don't have that much experience. We know what the pitfalls are in offshoring and right shoring, and we know how to solve those issues. And we know how to gather a lot of teams, large teams to build the business, and we want to build that scale. And that's why we would not be limited only to buying, because you can scale that better with serving other accounting firms with what we have learned.
Sure. And yeah, this sounds, it's certainly an opportunity for you. Let's talk about what's ahead right now. Are you looking for additional funding? Are you looking to scale up the team? What are your priorities right now for the near future?
There are three priorities right now. Is the funding is obviously number one, which is a continuous process if you want to keep building and buying. So that's going to be a continuous process, which we
Are
already.
you raising another round anytime
Yes.
soon or?
Yeah, we are closing one round, and right after that we're starting. We have a whole M&A team also internally, which does all the fundraising and all that. In
Maybe we'll have
parallel,
to talk offline about that second round.
you stay tuned. We'll have some press releases soon, so
Sure,
that will
sure.
be. And in parallel, we have a team. I think you met my colleague also earlier. He works on identifying the accounting firms and seeing what the fit is, whether how we can talk to them about right shoring and
Mhm.
see if there's an opportunity to buy or just be a client. Because some people don't want to sell at this stage. We don't mind. We'll help you to build. No issues at
Yeah.
all. We are operators. And any accounting firms we acquire, they'll be left alone to run the business as they're doing, accepting that we'll implement AI, making AI work within those firms.
And is that like a typical roll-up model or earn-out model when you look at
Yes,
those
it's
acquisitions?
typical. What APS structures that way that's all in the public domain as to what the structures are. And there's a very similar structure which we have on our model. And that's the second strategy. And third strategy is we have a tech team of about 75 people offshore, and
Seven, five.
yeah,
Wow.
75 people.
Huge.
And they are just focused on looking at use cases, what's being built by a lot of other companies, how we will differentiate ourselves in these products. And we are very nimble. We're going to be taking maybe some of the existing tools and maybe layer our AI wrapper on top to be able to execute faster. Because this is going to be a game of execution. You can't do this without how to execute and build scale. With private equity firm as a backing, you got to do that in 5 years. You got to build significant size. That's our
Yeah.
goal.
Yeah. And do you currently have a post-money valuation right now, or is that sort of another sensitive topic?
That's a sensitive topic.
Okay, all right. We can talk
Because
about that some other time.
by the way, post-money valuation will be changing every month.
That's what I like to hear. Okay. Now, we talked about a lot, and I think we'll probably have you on again because I have a feeling that this is the tip of the iceberg. We didn't talk about the two other agents. We didn't talk about also, I believe you have a practice management capability as
Yes.
well. Do you want to
Yes.
spend maybe about a minute or so talking about the practice management capability?
Well, practice management is just an add-on to our other tools where we have automated some of the other processes like
Mhm.
budget, staff modeling, availability. There's AI tool to do that also within our suite of audit tool.
Okay.
Anything from billing and all that
Work
is
in progress.
work with runs and all those things.
So this
That's
is your own tool. This is your own tool that you've
yeah,
built
this app we have
internally.
built, yeah, internally. And for
Got it.
CAMs, there is an interesting area which we're looking at the productivity of how to manage teams offshore, the productivity of it and the managing. Sometimes managing offshore teams is not that easy to get the work out and see what the productivity is. Let's say the client, you budgeted 30 hours for doing some work in CAS. Why is
Hmm.
it taking 50 hours and how to manage that? All that is part of the practice management side, which we're in a build phase.
Got it. And how are you charging for your services? Are you like taking like a SaaS model, recurring revenue? Is it hourly? You mentioned that you significantly drop the amount of labor that's associated when you guys come on board. How are you charging for your services right now?
It's going to be customized based on the client to client because there are different aspects to it. The tax return could be by return because
By
that's the
return.
by easiest way to look at it. The
Okay.
single return, whatever the number is, we got 3, 4 tiers on that.
Yeah.
So that's very easy. In
I like
cash,
that metric.
yeah.
Yeah.
Gas also, I think, can go in the direction. We have not done it yet, but we are surveying it. Right now, everybody charges retainers most of the time in the gas business, or they do it by hour. I think that is can be changed to we could be like if you're charging for the client $10,000 for a project, it could be that we'll charge you maybe and deliver, because CAS 90% of work can be done in right shoring. 10% review has to be done in onshore. So there,
Sure.
I think we can cut a lot of costs. It could be like 30%, or we'll charge 40% of whatever you're getting. That way it's variable for you. So then they're protected in the downside. And we
Got it.
won't charge for technology. AI will be embedded into our pricing.
Sure.
So we don't
And
want to go into SaaS, you buy what micro apps you use and how much. Right now, we decided that we will just inbuild the price within our AI augmented team.
got it. And are you at the point now where, and a lot of these are, scope is always the biggest issue, whether it's tax returns, the complexity, whether it's audit, the complexity of that, the amount of tasks that are involved. Are you currently at the capability where you have any fixed fee pricing models where you can say, hey, we have these three services that are, we can easily scope it and it's going to be 10,000 or 20,000. Do you have any fixed fee particular services now, or is it not
Yeah.
really at that point? Most of these things are customized.
Yeah, right now it's customized. We may go evolve over time, but I don't see that happening. I think it's very difficult for accounting firms to agree to a fixed price. They would go rather have variable where they can dial up and down what their needs are. And that's where the SaaS started.
Yeah, and it's definitely debatable. On one hand, this is something that they can budget for, but obviously there's, yeah, if it scales up, that could impact things. It really depends on you understanding their processes and being comfortable to scope that into a fixed fee. A lot of SaaS companies are SaaS started with obviously software as a service, monthly recurring, quarterly, annual. Some of the more modern ones are going more toward a metered kind of service, right? So you're paying for these little micro tasks, right? And I like it when you said one of your go-to fee structures are per tax return or per 1040. And I think that's an interesting model because it like we just were talking about earlier, if I know that, hey, I have a very seasonal business and by this part time of the year, I might need to scale up to 1,000 tax returns, or maybe I acquired another small firm and now I'm at 2,000, sort of like on demand, but I want to have the ability to say, hey, Fiscalix, if I take on another 1,000 tax returns, A, can you do it? And B, how much is that going to cost, right?
See, that is very measurable. The tax parts is easy to put per transaction, per return. I think cash can be modeled that way also. Audit is very difficult to model in that manner because we feel that we are delivering AI augmented team, and there is a cost of the labor and cost of the technology which we bake it in, so that it has to be less than what you're paying today. Otherwise, why would you do
Sure,
it? And
sure.
if you start charging fixed price for, oh, I need so much per month for technology and so much per FTE, I think people will not be able, they won't be interested. But then again, oh, I can't use this, I can't do this, or whatever. So it's our responsibility to deliver. And we've got experience into it. That's why we feel we can take the risk in some cases.
And that's your wheelhouse. That definitely makes sense. Kishore, like I said, I feel like we've touched the tip of the iceberg. I think I want to have you on in a near future where we can go down and actually talk about some of your results because I'm going to call you on the EBITDA margins in the 20, 30, 40%. I love those numbers, but I'm going to come back and make sure that's, how that's actually doing. Thanks for coming on the show today. It's been great. How can folks get in touch with you if they want to learn any more or learn more about what Fiscalix is doing?
They can reach out to me on my email, Kishore at Mirchandani at fiscalix.com. And that's how they can get in touch. Or we have info at fiscalix.com also.
Great, great. Kishore, thank you for hopping on the show today, and it's been a pleasure.
Thank you, Mark. It was indeed a pleasure to participate. Thank you.